Hello everyone, I hope you're doing good this morning and I wish you all good luck in the stock market and be safe. Today I want to talk about the stock market. I want to do a quick review about the stock market, what is going on really and what has happened and since the last review I have done. Please subscribe to my channel if you haven't done that yet. So the review will be simple. It will be mostly about the sectors and the main indexes. That's what I'll be talking about. That's it. Let's get into it. Okay, so today the issue is the breakout issue. What is going on in the market? We want to break out, but we couldn't. What is going on? So let's look at the S&P 500, the QQQ, the Dow, and then we will look at the major sector: healthcare, financial, consumer good, technology services, industrial good, utility, conglomerate, basic material. Those are what we'll be talking about today. So I'm not gonna waste your time. Let's get into it quickly. Okay, here it is. This is the Dow 30 that we are tracking with the ETF DIA. So what happened since the last review I've done? This is the last review I've done. So today I'm gonna go and put a line of the date of today. Today is March 20, 2019. So I'm doing the review from today. Today, what have happened so far since the last review I did? I said this when I did my last review. I said the Dow is getting at a resistance and the Dow might struggle a little bit at that resistance. If it does break above there, we might get back in the bull market. So what happened? The Dow has a trouble at the resistance, then it pulled back huge, then it rallied. It couldn't hit it again. It couldn't break above this resistance. My resistance is this two line, is this zone. So it couldn't break above it. Then it start dropping again. That's what the Dow is doing. So far so good. The reason right here is the resistance is really important right here. This resistance is really important. The Dow couldn't break above this resistance, so you have to watch out for that resistance. Anytime the Dow break above that resistance, we are getting back in the bull market. We are getting back in the bull. We are getting back in the bull market. So keep this resistance line zone in your watch. In your watch site, so you can keep watching it every single day and know what is going on. Actually, you just don't want to get into the ETF without knowing that the Dow has break above this. I'm getting a call, but I'm gonna ignore that call for now because I have to focus on this and get this done. I don't know who's calling anyway. So let's go to the SPY, the Spider 500. So those are the 500 company in the United States. So what happened to the S&P? The S&P broke above this resistance. The last time I did my review, I said that this is a critical point that we are right now. The S&P struggle broke above it, but then it pulled back. It is at the resistance right now. It couldn't go above it. Once we got above this, I was saying to myself that that was another bull market that we'll be running in, but we didn't sustain the breakout. That's why I named this review the breakout issue, because we are not able to sustain that breakout. Now, is he gonna go sideways and then continue the breakout? We will see. Keep your eyes on the big boys. The main indexes. It tracks the whole market and it tells you what is going on actually, so you can make a better decision. Let's go and see the QQQ, the Nasdaq. What is the Nasdaq doing? I said it the last time that I did my review too. I said the Nasdaq need to break above this resistance. I put just a line right there because I'm referring to this last high that it has a few months ago. So Actually, the QQQ has done a little bit better. It broke above this, but then is going sideways. This is the issue that we have now. So you have to watch out for the stock market. The reason is we are at the top right now. We are at the top. We recoup all what we have lost. All all the stuff that all the money that we have lost since October, we recoup them. So you have to be patient with this, and you have to have a risk management with this, because we are at the top. Look at the trend and look at what could happen. This thing can come down. This is the next support that it could find. It broke up this resistance, now it become a support. So watch out for this and pay attention. Let's go and look at the sectors. What is going on actually? This is a brief review of the sector that I do every time that I have the chance to. It tells you what is going on in the market. Last week, the sector of basic material have gained 1.21%. On the monthly, 1.23%, not a big move. On the quarter, it is up at 11.73%. On the year, it is down at 5.89%. So basic material is not doing that good. Still a little bit choppy in range. So the conglomerate on the yearly, it is up at 12%, doing a little bit better. So on the weekly, it is up at 2.35%. On the monthly, it is up at 4.37%. On the quarter, 17%. Not bad. Still good. It's still doing good. So let's look at a consumer good. Consumer good has pulled back a little bit, but still in the week, it is up at 0.66%. Little bit tiny, small, and the monthly, it is up at 2.07%. On the quarter, it is up at 8.38%. On the year, it is down at 5%. So watch out for consumer good. It is still in a good shape, but it just pulled back a little bit. It might bounce again. The same thing with the financial. The financial has pulled back almost 0%, 0.01% on the week. I mean, last week or this week. Okay, during this week, the financial have done a little bit bad. So you have to watch out for them. On the monthly, 0.55%. On the quarter, it is up at 10.97%. On the year, right? On the year, it is down at 2.14%. This is healthcare. Healthcare is doing good. Actually, the healthcare sector is up at 0.62% on the week. On the monthly, 0.80%. On the quarter, it is about 7.68%. On the year, right? On the year, it is up at 8.76%. Not bad. Healthcare is doing a little bit better. Yeah, industrial good. Industrial good has done bad the last month and the last week. It is down respectively on the week negative 0.10 and negative 0.70. So it has pulled back. You can see on the chart, pull back and trending in range. On the year, it is up. It is down at negative 4.52%. Let's look at the services. Services on the quarter, it is up at 12.72%. On the week, it is up at 0.33%. On the month, 0.80%. On the year, 3.44%. Technology have been doing a little bit better on the week, and on the month, it is up at 1.08%. On the monthly, it is up at 3.98%, almost 4%. On the quarter, it is up at 16%. On the year, it is up at 2.00%. It means that No, I mean on the half year. On the year, it's still down at negative 11%. So that is, I mean, the technology sector is recovering a little bit. So you have to give it time with Facebook, okay, going down, and now Apple is coming back. So utility has pulled back. I noticed that I pulled back last week, negative 0.76%, and on the monthly it is up at 2.06%. Utility is still the best sectors on the year. 12 utility is still doing good. Utility and healthcare a little bit. They are the best. Conglomerate too. It is up on the year at 12%. So that was the quick review that I want to do. I hope you guys have enjoyed. Always do those reviews so it allows you to see which sector is moving and which one you can actually put your money in if you want to swing trade or if you want to day trade. Depending, you can go into the sectors and find stock individually that you can invest in. I just do this to tell you what is going on in the market. I hope you have enjoyed it. Have a beautiful day. Bye bye.